lower that 2.75%. You can always ask. Some banks will keep it at that maximum, and some banks will lower it for you. But again, I stress that when you're working with a bank, ask, because if you don't ask, you can't receive. The next piece is going to be the SBA Express. Now, how this is delineated is that Express loans are typically under $350,000. They have a less guarantee to the lender, but they typically have the same types of uses as an SBA 7A loan, which you see above. But one caveat that you can do in an Express loan that you can't do in a 7A loan is typically use it for a revolving line of credit. So that's very pertinent for a lot of borrowers that are doing a 7A loan to get an additional Express loan, again, for a revolving line of credit. Now, if you need a much larger line of credit, SBA also has another program called the U.S. SBA Cap Line Program, but those are for large lines of credit. Then the last piece that you could typically use in an SBA loan is an SBA 504 loan. Now, these are loans that are for larger pieces of equipment as well as larger pieces of commercial real estate purchase or refinance. However, that is the only uses for the 504 loan. You cannot use the 504 loan for startup financing, for business acquisition, for leasehold improvements. Well, actually, you can use it for leasehold improvements, but you can't use it for expansions, and you can't use it for debt refinancing. So I think for our purposes today, we're going to focus typically on the SBA 7A and the Express Loan Program. Next slide, please. Now, when we're asking about who qualifies, now the majority of small businesses in the United States will qualify for an SBA loan. They have to be organized for profits, and they have to be open to the public on a non-discriminatory basis. And really what the non-discriminatory basis means is that, for example, if you have a fitness studio that caters exclusively to women, then you'd say that even though you cater exclusively, you're not going to exclude another gender. Small businesses are organized according to the U.S. Small Business Administration via different types of categories in terms of both workers, so employees, and then the second category would be sales sizes. But again, 98% of small businesses do qualify under the SBA loan program. Businesses that don't are typically religious orientated, nonprofits, or businesses that are of a sexually prurient nature. Those typically are not businesses that qualify, as well as businesses that take the money and loan it out to other people. So when we talk about the process of doing an SBA loan, a lot of the SBA loan process can be done, thankfully, over the internet, over emails, using PDFs and signatures. So typically what somebody in my position would do in order to take a look at your application is to gather requested documentation, take a look at your cash flow, and then take a look at what it is that you're looking for. Now, SBA is referred to as a cash flow lender. And that's how we are different from a traditional lender, in that a traditional lender, my own bank included, is a collateral lender. So a cash flow lender means that for the uses of what it is that you're looking for, if you are currently in business, what the bank is looking for is to make sure that historically you have enough cash flow or excess funds in order to be able to pay for the new loan moving forward. If you're looking for startup financing, what cash flow would mean would be taking a look at your business plan, looking at your projections and assumptions, and seeing if the business can afford to be able to make those SBA payments moving forward. So then again, somebody in my position would take a look at information that you're providing, see if you are eligible, see if you have cash flow, and look at your desired uses of funding. And once that happens, we submit it in underwriting. Underwriting will do an assessment and tell you if you are eligible and if you are approved or if you are denied. Typical denials that happen in SBA shops are due to the current lending conditions at that shop. Even though multiple lenders work under 7A, even though multiple lenders offer express loan programs, some of the uses and some of the ways that you're going to use your financing differ from shop to shop and what it is that they're looking for. So what might be good at one lender might not be good at another. And so sometimes it might take one or two lenders for you to go to for your particular business in order to be approved. And then the last piece of the process would be your closing process. That is the process during which you as a borrower are collecting additional information in order for the lender to be able to fill out their loan file so that ultimately you can get your money. So then timing-wise, a typical SBA loan that does not include third-party evaluations typically will close within 4 to 6 weeks. I, however, like to have mine done in 45 days. Now, sometimes that works and sometimes it doesn't, but a typical SBA loan is closed within 4 to 6 weeks. Now, that 4 to 6 weeks is a timeline with which everyone should be able to work into. It can go shorter or it can go longer. Longer SBA loans typically involve more work, more third parties. More people that you add to the overall closing process, the more likely that this is going to get put off. Another thing that could potentially push the timing of your SBA loan is if the lender you are working with does not have preferred lender status. So there are two types of lenders that are in the SBA. One lender that has preferred status, which means that they can make the actual loan decision and loan approval on their own and close everything on their own. That makes for a much shorter process. Another lender that you may deal with would be what's referred to as a general processing lender. A general processing lender will take it in underwriting, look at what you have to offer, but then they have to send it into the actual SBA in order to get approval. And so I think it's important when you're approaching lenders to ask them what kind of status that lender has and how long the anticipated time frame for start to finish of that loan process would be for you. Next. Okay, here's what we're talking about what Huntington, again, a lot of banks may be offering this right now, but as far as I know, we're one of the only banks in the country that are offering these types of things to our current lenders, or to our current borrowers and our future borrowers. In talking with your current lender, which I urge you to do right now, find out what types of options are available for you. And sometimes, currently, your bank might not know what the plan is moving forward, but I think it's still prudent to be able to ask that lender what is going on. Ask that lender what types of plans do they have for you moving forward. Ask that lender what they're going to be able to offer you. So currently for what Huntington is doing is for our loans that are in closing, what we have done is we have amended all of our borrowers that are currently in closing. We've amended their post-closing. So that means after they close, we are giving everybody a minimum of 6-month interest-only period. So what that means is that from day one you sign that loan, you are only going to be paying interest on the amount of money that you borrowed. And we're going to be offering that for 6 months. Depending on your loan uses, and that typically includes doing leasehold improvements or massive improvements to a current piece of real estate that you own, we can go out to 12 months on an interest-only period. And what this does is that sets you right on day one in order to be able to manage your cash flow by, again, only making interest-only payments on what you've been borrowed. We're also offering a companion revolving line of credit. For every loan that I do, I always offer a revolving line of credit. And that revolving line of credit is done under the Express program and goes up to $350,000. I do this in order to make sure that you as my borrower, you as my customer, is capitalized correctly on day one. And a line of credit will help you to be capitalized correctly in helping you on a short-term basis to manage your cash flow cycles. Now, currently for closed SBA loans, if you are out of your principal and interest period on a closed SBA loan, Huntington is currently offering a 90-day full deferral payment schedule. So that means that we will not collect any payments from you as a small business owner for 90 days. And hopefully during that time, this will give you an opportunity to assess with your action coach or to assess with your valued center of influence or with your valued people that you work with as to a plan and how you're going to move forward with your business. And then also too, what Huntington is doing on our close is offering right now, if you have a current line of credit in place, to look at increasing that line of credit as well as increasing some permanent working capital. So again, we can get you the financing that you're going to need in the short term until we're giving more long-term plans from both the federal government and the SBA to allow the majority of our customers to be able to get through this cash flow cycle. And then for Huntington's All Future SBA loans, what we're going to be doing is the same as what we're doing for our current, which is just offering that 6-month interest-only period as well as an accompanying revolving line of credit. Next. All right, so currently in Congress, so everyone has probably heard over the past couple of days about what exactly is going on with this economic stimulus and how is that going to be able to help me. A piece of that $1 trillion to $2 trillion economic stimulus is going to be approximately $300 to $500 billion, which will be earmarked in order to expand our SBA 7A and Express loan programs. Now, $300 to $500 billion, what's a couple $100 billion for all of us, right? But I'll say this, the more money that Congress is be able to earmark towards the 7A and Express loan programs, the more money that is going to be available to you as a small business owner on terms and conditions that are beneficial for you. The second thing that is in that piece of legislation, and there's obviously more stuff that's going on with that $1 to $2 trillion, but I'm just going to talk about what's going to specifically impact us as small business owners in relation to the SBA. Another piece is that they're going to waive SBA guarantee fees. The SBA is currently a pay-to-play type of loan program. In order to be a part of it, you do have to pay the SBA a guarantee fee upon closing. What this does is ensures that you do belong and be part of the program. Another thing that is currently being looked at is to increase your aggregate SBA exposure from $5 million to $10 million. We talked about last week that currently, through either the 7A or the Express loan program, the 504 loan program is a little bit different, but the 7A and the Express, any current or small individual can only have up to $5 million in an SBA loan. And the measures here would be to increase that up to 10. One of the other things now that they're currently looking at too is to change the guarantee portion of the loan from 75% to 90%. Now this is going to benefit borrowers because again it makes some of these other pieces above better for the lender that's offering these programs and more likely to look at loans that they would not otherwise look at. So what we're doing is we're expanding our pool of borrowers by adding in all of the above pieces into the SBA expanded loan program. And then the last thing that they're looking at doing is raising the Express limit from $350,000 to $1 million. We kind of talked about the differences between the 7A and the Express, where we said that all Express loans are 7A loans, but not all 7A loans are Express loans. And one of the main things that raising this $350,000 limit up to $1 million will be able to do is to now increase a line of credit for businesses that are looking to supplement their cash flow cycles with lines of credit. And by just expanding this more, we're again allow businesses to be able to ride through your ups, your peaks, and your valleys that are inevitably going to occur. Next slide. And then I think just last parting words, which is, again, please call your lender. Try to talk about options that you might have talk about what your current financing looks like. Talk about how that's going to look in the future, and talk about what you can do. Your lender, again, might not have solutions for you right now. Some are going to be a little bit more up to date with what it is that they're looking at doing, and some might have to wait until they figure out from this economic stimulus as to what they're going to be doing. But I would still encourage you to find out from your current lender right now what's available, so that at least you have the dialogue, at least you know what your options are, so that you can make an informed decision moving forward once a lot of these other decisions with the stimulus starts to move forward. Then I also ask you to work with your action coach as well. I would come up with a 3-month, a 6-month, a 9-month, or even a 12-month business plan. And by doing this business plan that you need to rewrite, this will allow you to focus on your business. This will allow you not to focus on any of the external noises, but to focus on your business, come up with a plan to help you, number one, with the funding, come up with a plan on what you're going to do to come out of this so that you're going to be much stronger than when you came into it. And Craig, I believe that concludes my piece.
All right, I'm coming back on. I'm going to cover a couple things and we'll dive into Q&A, okay? And so if you guys can see this, certainly to finish up, just get with your local action coach quickly. We're very good at helping pivot, helping drive, making sure your mindset is in the right place, or your team's mindset, getting your finances in order, cash flow, community, speed, and preparing for what's coming next. We're very good at that stuff. If there are any action coach clients on that wouldn't mind sharing something for the non-clients, that would be great. Just unmute yourself and say something, like Linda Sheridan, potentially, whoever happens to be on here. Get with your other key advisors and get them in the game with you. We need to work with your CPA, your banker, your attorney, your landlord. Talk to your landlords and ask them for, if you don't own your real estate and you're renting, have your landlord see if they can do a few months of deferred payments and just tack it onto the back end of your lease. That's very common right now. Just talking to a client yesterday, they talked to their landlord deferred it for 6 months and said, we'll just tack it onto the back end. And so that's the kind of things you want to be doing. If you do currently own your property, talk to your banker and say, hey, is there any way we can defer some payments for a few months and just increase the payment coming out the other side? So everybody knows that this is a time to do this kinds of stuff. Definitely get the right funding in place, whether it's an EIDL loan, whether it's a 7A or an Express. Get with Mike or a different banker. If you've got a good banker to work with, he can refer you to people as well if you don't know who to work with in your area. There's some equity rollover programs available as well. In fact, on our next call on Thursday, we're going to bring in somebody to talk about utilizing equity rollovers. Very unique form of financing, but if you and or a spouse or a loved one has retirement funds that are otherwise inaccessible without paying huge taxes and penalties, you can actually do a rollover to access your own funds and invest them in your own business versus the stock market. And certainly state governments and stuff are rolling out new grants right now, et cetera. So try to stay up to date with some of that kind of stuff. So now I'm going to open it up for Q&A. And so if you guys don't mind, we'll just open it up. If somebody wants to, I'm not seeing the chat box for some reason on this.
Craig, this is Linda Sheridan. I have a few questions if I can start.
Yep, that'd be great. And if anybody else would like to, before Linda starts, as you have other questions, just pop them in the chat box on the bottom of your screen, and I will go ahead and just read them off. And yeah, go ahead, Linda.
Okay. So, Mike, I apologize. I was making notes. You talked about the emergency disaster inquiry loan. What was the time frame for the application process? You said 60 days to fund, but I missed the part about how long to actually get the application through the process.
Hey, Mike, you're muted.
Can you hear me now?
Yes.
Gotcha.
Okay. I've been hearing up to 21 days, Linda.
21 days. Okay, awesome. And then what if, so I'm a CPA firm, and of course we're working with our clients pretty closely, and you mentioned 3 years tax returns, including 19. We're doing our best, but the reality is most of those 19 returns are in the shoppers somewhere. What's an alternative to the 19 tax return? I'm hoping there is one.
Yes, if you don't have your 2019 returns yet, both SBA loans from the bank and SBA loans through the EIDL will accept 2019 year-end financials.
Prepared from the client, okay, or do they need, okay. So
yeah, they can be prepared from the client.
Okay. We're suggesting with our clients that they let us take a look at them first, make sure there's nothing kind of, wonky that needs to be adjusted from a bookkeeping standpoint. So that's kind of the conversation we've been having with our clients.
Perfect.
Since I have the mic, I'll go ahead and go through all my questions if that's okay. On the SBA rules, we talked about the lender, what kind of a shop they are, and maybe having to use multiple applications. Do you wait till you get a denial from one before you go to the next, or does it hurt to have a couple different ones pending at the same time?
Let's see here. As an SBA guy, I hope that I'd be able to get you through on just one application through my bank. However, I would say it would be prudent that you do work with one or two other lenders. Some lenders are more equipped to handle volume than others. Some lenders have, even though, again, we all work under the same type of program, some lenders have different paperwork in addition to the SBA paperwork that they're looking for. Some lenders can get you a yes quicker than others. And so it might be prudent to work from a borrowing standpoint with one or two lenders to make sure that you are getting the type of service that you're looking for, and you're ultimately going to be able to get that financing in the shorter period of time.
It sounds like primarily the preferred versus a general processor is your first, kind of question, because the preferred one might turn a result around faster anyways, right?
Yes, and they're able to make the decision faster. And then when you think of all the people around the country that are going to be sending in applications into the SBA, they only have so much manpower as well. So, and that's generally the reason why SBA has given these types of distinctions, is to allow the banks that do volume to be able to make the decisions.
One last thing, and then I promise I'll be quiet, and I'm going to mute my phone. I have to kind of reiterate and actually thank Craig and Annette. We have been coaching with them now for a couple of years, and never seeing this coming. I had no idea how valuable that relationship was going to be. So I can only say thank you, both of them, very much. I've been in constant contact with them as we've gone through this just since Thursday, Friday. I mean, it's changed daily. So I can't say enough. Not only that, but we're much in better shape today than we were 2 years ago. If this had happened 2 years ago, I know as a group, as a team, we would have had a much different response, and it wouldn't have been as nearly as organized as we are now. So I can't thank them enough for all they've done for us, and certainly suggest anybody check them up as soon as they can. I'm going to mute my phone now, Craig.
Okay. By the way,
you.
Thank you, Linda. That was awesome.
Yes. Well, and thank you too, Mike. I appreciate your time too.
Yeah.
Very welcome.
Here's a couple other questions, Mike, from the field. Denny asks, can a company submit an application directly on the SBA Disaster Assistance website through Huntington?
No. So for everyone that is new and weren't able to be on the talk last week, these are two types of funding. The first funding for the economic disaster loan is coming directly from the SBA Disaster Relief Program. So if everybody remembers what happened a couple of years ago with Hurricane Sandy, when we had the issues out in New York and New Jersey, that is, or when we have FEMA designated areas, that's typically where then the actual SBA as the government organization comes in and is going to be lending the money directly. And so if you are looking for these EIDLs, the money comes, part of this $50 billion that the current administration has released, that money is specifically coming from the SBA.gov. And if you're wholly separate, so no, you won't be able to come in through our website and apply. So you have to go in through SBA.gov, I think it's /disaster.
Yep. So obviously dealing directly with the government is a little bit different than dealing with a private sector bank. So be prepared for some of the challenges of dealing directly with the government. But certainly you could go both ways, correct, Mike? We could apply for, somebody can apply for a 7A or an express loan while they're applying for the EIDL. You'll hold their hands through the 7A and express. EIDL is just direct with the government, and ideally whichever one qualifies first is fantastic, correct?
Whichever one qualifies first, run a dual track, when you sit down with your agent, when you sit down with someone like ActionCOACH and you figure out how you need to move forward, what's going to be best to capitalize your business, I would encourage you to look at all sources that you can, because given your current situation, whoever comes through first, whoever comes through second, you still might be able to take as well. Whatever is going to be best in order to keep you in business. So I encourage you to take a look at multiple streams of revenue, of financing sources.
Yep, perfect. Tony asks, what do you need to qualify to get an emergency loan?
Again, through the EIDL, they are opening this up for a majority of small businesses. If you go on the website, it will tell you which businesses are not going to be supported by this EIDL. In order to qualify, you do need to provide your financial information. You do need to use that money earmarked towards what they have said you can use that money for. You cannot use that money as a substitute for a business that was already, shall we say, trending downward. So there are certain stipulations on the website that you need to be able to do in order to qualify for this financing.
Okay. Brent asks, what would be the best option for a small business that is less than 2 years old and was really just starting to ramp up and now needs to consolidate some debt?
Sure. So same thing, work through that Express program or that 7A program. Because you are a startup, or less than 2 years that are in business, some additional information that your lender would ask for would be a business plan. So you should probably already have one from when you got your initial financing. So update your business plan, and then update your financial projections and assumptions. And then obviously for everyone, as you approach the lender, it's good to have a background, or it's good to have a little bit of a story as to how you've been impacted. That will help the lender to assess and to take a look at the needs moving forward.
Okay, so essentially this is the track we were on, this is how we were trending, and now because of coronavirus, this is what happened, and this is our best guess as to, how 2020 is going to shake out because of it.
Correct, because when the lender is taking a look at your cash flow, they need to kind of see your plan. They need to see where you were at, if you were going stable, or if you were still in that startup stage to where you were bleeding through money, or if you're on an ascension. And if they know kind of, well, we had some contracts that got canceled, however, we're able to get it back because of this. We've been in conversations with all of our vendors. We've been in conversations with people that we've been working with that are purchasing our projects. That allows the lender to be able to say, okay, now we have the story of what's kind of behind this, and we have a business owner that's been proactive with what it is that they're needing and not necessarily reactive.
Yep, perfect. Michael asks, what's the status of the forgivable SBA loans that they're throwing around in Congress and the news that will be used to protect payroll over the next 4 months or so?
So again, I think that that's going to be part of this $500 billion economic, or part of this $1.5–2 trillion economic stimulus. As to we'll get more information the more that what is actually in these bills starts coming out. And I think really the stimulus behind that, or the thought process behind that, is right now we have a lot of small business owners. Everyone, we're scrambling. We're scrambling to try to figure out what we're going to do. We're going to scramble to figure out how we're going to keep going as a business, our employees, how we're going to keep going as ourselves. And so a piece of that is going to be, if we have our short-term loans that are going on, what can be done in order to either cancel those loans or to put, like Craig was talking about earlier, put those payments closer on the back end of the loan rather than the beginning. So again, you can manage that cash flow and have funding available for what you want to do. So a short answer is, I guess we're going to see. However, there's been a lot of discussion in order to be able to, again, help the small businesses. Mm-hmm. I know that everyone on the line right now is afraid. I'm afraid too. However, the bank and the government especially, is going to really step up for what it is that we're going to need nationally. They need to. This situation that we've been in is unprecedented, at least in my lifetime. And the government recognizes that this is not a cause from what happened in the economy. So this is not like in 2008, the banks doing things they might not should have been doing. This is not a certain sector of the economy that has really put us at risk. This is a global pandemic, and again, nothing that anyone could have accounted for. So the government, all parties involved, hopefully, are going to get together and hammer out a solution in order to help small businesses moving forward. They're going to put in provisions for financing. They're going to put in provisions for deferred payments. They're probably going to end up doing 1 or 2 more cycles of this, because $2 trillion, I can't fathom. However, when you gather up how many small businesses there are in the United States, it's going to need a lot of help. So know this, the government is looking for ways, and it's not considered a bailout. It's considered help for all the small businesses involved.
Excellent. And that is a big distinction from 2008, where there was fundamental flaws in our economy. That's not the case now. So the government learned a lot from what they did wrong the last time. So we got both things playing in our favor this time. For small businesses, and we have a president who believes in small business, so that's a good thing for right now anyway. Johanna asks that SBA loans, emergency SBA loans, includes a document that certifies that the size of the business does not exceed certain size limitations based on the industry that you're currently engaged. Her business provides a variety of services that fall under many different NAICS codes, so different industries. How does the SBA handle that situation, Mike?
Typically, the NAICS code that you're going to be using for both the disaster loan as well as the SBA loan from a lender is going to be the one that's put on your tax returns.
Perfect. So that's your primary one. Jason asks, are real estate properties, LLCs, eligible for the SBA emergency fund?
I don't have a direct answer for that. That's a tough question. What I will do is I will find that answer out, because hidden in a lot of those slides that we were able to send out. And if anybody needs a slide presentation as to how to go through and fill out the application, Craig has one, I have one as well. Hidden within that, they give certain industries, and they're keeping it very, very broad right now. And so I don't know if this is a matter of going through the application, putting in that NAICS code to make sure that it is a piece that is going to be eligible for financing. If you have a local resource, a local score, you have a local SBDC, which is a Small Business Development Center, you might be able to ask them, or else you can try to go through SBA.gov disaster. And I hate to keep sending people back to that disaster website, but know that, again, this is unprecedented on the level of which the government is going to be dispersing these funds. And so there might be some things that they haven't reached yet. So hopefully what they're going to look at doing is making this much wider and much easier for people rather than excluding. But I think right now I'm not sure specific industries if they're going to be eligible or not.
Okay. And my advice, Jason, is certainly if you are being impacted because your real estate properties are generating less in rent or whatever in the immediate term, or you strongly suspect that that's going to be the case, or maybe the valuation has gone down, I would apply for the emergency and see what you can get. Dale asks, how do you determine the amount to apply for?
Based on your needs.
Yep.
And I know that is, I know that that's a non-answer answer, but based on what your needs are. So again, get together with your qualified coach, get together with your qualified preferred advisor, and say, okay, what am I going to need in the short term? 3, 6, 9, 12 months. Take a look at your industry. How has your industry been impacted? And what do you think that you're going to be able to do coming out of this? And knowing that we're not sure right now, the government's not sure, the banks are not sure how long this potential crisis is going to last and how long the financing is you're going to need financing for. So that's earlier when I talked about, I believe there's probably going to be more than one cycle. This is just the first cycle to see exactly where we're at. And I think as the days move on and as we start to get a hold of where this pandemic is at, I think that's going to give us a better idea as to if there is going to be an additional injection cycle, but then also what type of strategies that we're going to need moving forward. And so I would say, ask for the most in all your applications. Ask for what is pie in the sky, because you don't get what you don't ask for. And if you can't qualify for that higher dollar amount under the EIDL, temper it down a little bit.
Yep. Good advice. I remember back in college, Mike, I was applying for some student aid, and the girl behind the counter at a large state school, University of Wisconsin-Madison, she said, oh, just overestimate some of your expenses and apply for a lot. And well, my biggest dream came true, which became my biggest nightmare because they gave me a lot and I had to pay it back. But yeah, good advice. Just get what you think you need, overestimate a little bit because we don't know how long this thing's going to last. Kim asks, how many years would a business need to be in business to not have to provide a business plan as part of the lender requirements?
Lender requirements for the SBA, directly from a direct bank lender, typically if you're under 2 years, so if you do not have 2 years of tax returns that you can provide. And then it also depends too on what it is that you're asking for. I would say it's always good to have a business plan as a small business owner, because your business plan is your map as to how you're going to be moving forward. Your business plan is something to refer back to say, okay, what is my marketing? Is that working? What are my demographics? Is that working? How much financing am I going to need? Do I have too much or do I not have enough? So I would say that having a business plan up to date, 3, 6, 12 months, is probably crucial. When you're asking an SBA lender for money, it's usually good to kind of have that type of stuff in your back pocket, because the lender wants to make sure that in addition to the financials that you are providing, they want to see that you have a plan. They want to see that you know what your business is, that you're actively involved in day-to-day operations, and that you just don't have this business as a passive investor.
Yep, excellent. Dale asks, does the disaster loan require collateral?
So there is no collateral required for the first $25,000 ask. Everything after $25,000 does require collateral as much as you can.
So basically, if I understand it right, Mike, working with you and through this whole process the last couple of weeks, they'll take collateral if it's more than a $25,000 loan, if you have collateral available. If you don't, it's not required. But if you have some available, then they'll take it, which would be including your house, inventory, whatever you might have, correct?
Correct, correct. And then when you look through an actual SBA lender, so a bank lender, they're going to see who else out there has rights to that collateral, and they'll also make their financial decision, their financing decision based off of that. Technically, the SBA, so the bank loan, SBA loan, you cannot be denied because you are collateral short. Okay. However, there's a big difference when someone is asking for $5 million and they have no collateral versus someone that's asking for a couple $100,000 and they have no collateral.
Excellent. Debbie asks, is it possible to have multiple SBA loans at the same time?
Mm-hmm. All right. So from my understanding, again, I assume that when you're asking about SBA, we have this economic injury loan, which is one loan type that's coming directly from the SBA, and then we have a bank loan SBA. Now, for the bank loan SBA, you can have as many SBA loans as you want. You just cannot exceed an aggregate total of $5 million. If you have a separate disaster loan, SBA disaster loan, that is different, and that will not count towards your SBA bank loan.
Okay, so if I understand properly, depending on if you qualify for the amounts and all that kind of stuff, you could have up to $5 million of normal combinations of Express 7A, 504 loans, whatever. And on top of that, you could have a EIDL, an economic injury disaster loan, for whatever amount you qualify for there. And and based on the bill that's currently going through Congress, that Huntington, by the way, is instrumental in helping craft that, for those of you that don't know, being the largest SBA lender in terms of sheer volume of loans that they approve every year. But based on that, the $5 million limit is likely to be increased here in the coming days to 10 million if it passes as is right now. Is that correct, Mike?
That is correct. So that is one of the pieces to when SBA comes to usually some of the largest lenders in the country in order to get their opinion to move forward on policies or to get their opinion on things that they're going to put in place. And for the current pieces, we were given our input as to what would be beneficial for small business owners. And one of the things that is being put forward again is increasing that $5 million aggregate exposure per borrower upwards of $10 million.
Excellent. And again, Huntington is a preferred lender, as are a number of the other bigger banks in the nation. That expedites things tremendously. Huntington, obviously, only doing business in 8 states, and they're still the #1 lender in terms of numbers of loans approved last year. Says an awful lot about them and their small business friendliness and their ability to get deals done. So definitely, if you're in one of those 8 states, if you're not currently working with Huntington, definitely consider it. And if you are, be thankful you got a great lender that loves small businesses. If there's no other questions, we'll wrap everything up. We will get you guys out a link to the presentation itself so that you can use that, as well as some of the other resources in terms of how to apply for loans and things like that. So if there's any other last minute questions, feel free to type them in there. Otherwise, we're gonna get this thing ended so you guys can get on with your day and getting on with getting through this recovery. Get with your local action coaches. All of them are offering disaster recovery and disaster battle plans and things like that. Every one of our coaches right now around the country is offering free time for small businesses that are scared given the current situation and helping you with immediate decisions you need to make. And as Linda mentioned earlier, they're in just such better place having worked with us for several years. But she's also part of a community of other small business owners by working with our coaches and our coaching team, and the masterminding that comes through that, and the encouragement, and the here's a strategy I'm implementing right now that applies to other businesses as well, is also invaluable. So get plugged in, get the funding you need, and we're here to help in any way we possibly can. Again, we're going to be back online on Thursday. Hopefully we'll have answers to the bill going through Congress right now. Hopefully the politicians on both sides of the aisle come together in the next 2 days. It's looking that way as of today, that they're moving closer together, which is fantastic. And we're going to be adding another component to this, and that's the leveraging of rollovers of retirement funds. If you or a spouse or a loved one wants to invest in your business with retirement monies without having to pay any taxes or early withdrawal penalties. So we've got another strategic partner. His name is Dave Wogan, who's going to be joining us from a group called Tenet Financial Group. So, and Phoenix Funding Solutions. So Mike knows him real well. I know him real well. A lot of our action coaches around the country know him real well also, because he's worked with a lot of us and some of our clients. So definitely be there Thursday, same time, if you want information about that, or feel free to push out the invitation to other people that you know that are in business that could leverage any of this. Take care and God bless everybody. And one other quick question. Lisa asks, where do we get the information to fill out the application? So we'll
okay.
send.
Which application? Because remember, we're talking about two separate facilities. We're talking about the economic disaster loan that's coming directly from the SBA, and that I could send to Craig, and Craig can disseminate to everybody that's registered for this. And then the other application would be a bank application, and I can forward that on to Craig, or you can connect with me directly. And then also I would say too, thank you again everyone for having me. And just to allay some fears, the government is here. They are willing to help, and they are putting forth a lot of money in order to continue on. And I know that there's a lot of uncertainty right now, but again, to reiterate, there will be financing available. It's just going to be a matter of when do we hear. But the financing is going to be there to get us through short term, and more than likely, my personal thought process is more than likely there's going to be more segments, more things that are going to be done in the future in order to carry us through. Basically, the whole economy is now in the startup phase, right? So you think about once you started your business, where you were at with financing to start, and the peaks and the valleys you had to go through so you got stable. And so the government is going to be here. The banks are going to be here. The banks are going to be here to help you. And a lot of banks, majority of us, are prepared. We want to help, and we're going to be open for business for you. So this isn't necessarily a commercial for Huntington. It's a commercial for all the banks to let you know that we are going to be here to help you, to take you through this, and to get you the money that you need. It might take a little bit of time, but we're here to help.
Yep. Well said, Mike. And as small business owners and entrepreneurs, you are the backbone of the economy. The government recognizes that. Obviously, the bankers know that. We all know that. And our economy is going to need you more than ever as we get through the next couple of weeks to really step up our games and drive the expansion again, to get back into it. So stay focused, stay positive, keep your vision and eye on the ball on where we're headed. Make the right decisions right now, get plugged into the resources you need, get your advisors on board, and don't wait. Make the decisions you need to make now. There is limits to the amount of money that's going to be available, and so make sure you get your piece of it and get there ahead of your competitors. So take care. God bless. We'll get you guys out more information and resources, and Take care. Have an awesome day.